Hello everyone and welcome to my YouTube channel. This video continues with the 10th part of the series, How Does Money and Our Global Economic Cycle Work? It starts right after the intro. Stay tuned.
Insights for the informed investor.
Corporate forms. Please note that the company forms discussed here apply in the European Union, particularly in Germany. Other countries have very similar company forms. Before setting up a company, find out in detail about the possibilities in your country. Tax consultants, the relevant authorities or lawyers can help you with this. Corporations. Public limited company corporations include, among others, the stock corporation. This is often abbreviated to public limited company. What are the advantages of a public limited company, and how is it structured? This type of company will be dealt with first in the context of corporations, before the other corporations are discussed in detail. You should be aware that a public limited company only becomes interesting if you want to raise large amounts. This is because the share capital of a public limited company, which you can also regard as its equity capital, is divided into shares. To set up a public limited company, you must raise 50,000 euros by issuing shares. These shares have a certain nominal value at which they are issued. However, it should be noted in advance that there are high organizational requirements. There must be at least one shareholder for the company to be founded. If this is the case, it is a so-called one-person public limited company. In addition to this person, there may be other legal and natural persons. The supervisory board must also consist of at least 3 persons. The great advantage of the public limited company is its liability. You are no longer liable with your private assets. On the contrary, you are only liable with the company's assets. However, the formation process can also take a long time. This is due to the fact that you have to draw up articles of association. All regulations must be written down in this. Ultimately, this means that you will have to deal extensively with a notary before you can set up your public limited company. In addition to the 50,000 euros that you need to raise by issuing shares, you should not ignore the actual formation costs. The actual startup costs are borne by the founder. These costs usually amount to just under 2,500 euros. However, these costs depend on the share capital. Another important point is that your public limited company must be entered in the commercial register. This aspect can also take a long time, so you should allow for delays. With a public limited company, you will need to use a tax consultant. This is because you have to publish annual financial statements at the end of each year. You also need to ensure that you have proper double-entry bookkeeping. You should also bear in mind the management rights. Contrary to popular belief, the management board does not have sole management rights. This is divided between the management board, the supervisory board, and the annual general meeting. Now let's look at the advantages and disadvantages of a public limited company. One major advantage is that you can easily raise equity capital. All you have to do is acquire additional shareholders for your company. You also have good continuity and can make additional contributions in kind to the share capital. Another important advantage is that the shareholders can be changed at will. You can appoint external directors without having to sell any company shares. One decisive advantage is liability. You are only liable with your company assets and not with your private assets. You also have the advantage when founding a public limited company that the shareholders do not have to be exclusively natural persons. On the contrary, the shareholders can also be legal entities. You also have the advantage that the public limited company is one of the best-known forms of company in Germany. This gives you a serious impression when talking to other company representatives, which can make a big difference. If you have a small public limited company, you should be prepared for various options for expansion. One of these possibilities is, for example, that you have the option of going public at a later date. In addition, there is not necessarily a right of co-determination for employees. As you can see, the advantages of a public limited company usually boil down to the fact that it creates a professional and reputable impression in the external relationship. Corporations, limited liability company. Next, let's move on to the limited liability company. You will most likely have heard of this already. But what is a limited liability company, and why might it be worth setting one up? First of all, let's look at the advantages of this type of company. A limited liability company, like a public limited company, is a corporation. This means that one major advantage is that you have a high degree of flexibility. Of course, you also have obligations that you must observe under all circumstances. However, after all these requirements, you have a high degree of flexibility in the design of the shareholders' agreement and the change of shareholders. Company succession should also be mentioned at this point. Another decisive advantage, which is why many people favor the formation of a limited liability company, is quite simple. The limited liability of a limited liability company offers a certain security that many people appreciate. They no longer have to be personally liable. One of the reasons for this is that a limited liability company is a legal entity and not a natural person. This gives you the decisive advantage that you no longer have to worry about your own well-being. In addition to these two major advantages, there are also disadvantages that speak against the formation of a limited liability company. The first disadvantage is the high minimum capital requirement. Not just anyone can set up a limited liability company. This only happens over time, once the necessary capital is available. In the first step, founders must pay in 25,000 euros as share capital before they can set up a limited liability company. This sum puts many people off, and understandably so. After all, not everyone can raise 25,000 euros just like that. The advantage is that you can use this sum later for trading. You can conclude transactions and use some of the money you have paid in to pay for these transactions. Another major disadvantage is that the amount of work involved is very high. A limited liability company always involves a lot of work. When setting up the company alone, you have to comply with numerous formalities that involve a corresponding amount of work. A limited liability company must be entered in the commercial register and also notarized. In addition, the bookkeeping and accounting for this type of company requires enormous effort. If you fail in one of these tasks, you will face serious challenges. These will not only affect the limited liability company itself, but also you as an individual. To help you avoid these risks, it is advisable to seek the help of a tax advisor. They know how the accounting and bookkeeping of a limited liability company should be carried out. The disadvantage is that a tax consultant is associated with high fixed costs that you may not be able to bear at the beginning. Another risk is the risk of personal liability. With the last sentence, you may be wondering whether you have really read correctly. You have. Actually, shareholders are not liable with their personal assets if you have a limited liability company. However, it is different if they breach their duty of care. Even at the beginning, you may be personally liable. This is due to the borrowing of outside capital. Accordingly, you should be prepared to be personally liable for borrowing. Another potential problem could be the clear separation between company and shareholder assets. If you simply take something from the cash register, this can have serious consequences. There is a clear separation between the assets belonging to the company and those belonging to the shareholders. Profits are of course distributed, but this also depends on the shares. The separation of all assets is more difficult than you might think. You may make a small, unconscious mistake in practice. This can have serious legal consequences for you. So what is the bottom line for a limited liability company? It can certainly be worthwhile if you have sufficient capital at the start. However, if you do not have enough capital available, this can be critical. You may not have enough capital available to set up a limited liability company. In this case, you should be prepared to invest your capital in the company itself. In this way, you can ensure that you maximize your capital before setting up a limited liability company later on. When founding a company with several shareholders, you should consider another important question. Ask yourself whether your fellow campaigners want to bear the costs associated with the limited liability company. Otherwise, your limited liability company will be doomed to failure as soon as it is founded. You should avoid this at all costs. You should also consider the main advantage of the limited liability company. How important is the limited liability aspect? Does it really need to be an essential part of your limited liability company or not? If you can answer this question in the negative, other forms of company may be suitable for you. It may even be that a sole proprietorship is completely sufficient at the beginning. However, you should also be aware that you bear a higher risk. If you do not mind this risk, you are welcome to use this type of company. You can also fall back on an entrepreneurial company. You can set this up with a contribution of just a few euros. The advantage of an entrepreneurial company is that you can easily expand it into a GmbH at a later date. You can also ensure that you only have limited liability. However, this also depends on your assets. If you have only deposited 100 euros, and this corresponds to your total assets of the entrepreneurial company, you can only be liable up to this amount. Another decisive advantage of the Unternehmergesellschaft is that you can set it up for all kinds of activities. When it comes to taxation, you should be aware that you have to pay corporation tax. This offers the advantage of lower taxes compared to a sole proprietorship. In addition to the variable shareholder agreement, you benefit from the fact that a shareholder can also be an employee of the company. You can also claim any personnel costs. Selling an entrepreneurial company is also very simple. All you have to do is sell the shares that are divided among the partners. Finally, it should be mentioned that the shareholders of an entrepreneurial company can be both natural and legal persons. If you've enjoyed the video so far, don't forget to like it. Subscribe to my channel and activate the bell to give the channel added value and support my channel for free. Corporations, limited liability company, and limited partnership. In addition to the actual GmbH, there is also a special form of limited liability company, the limited liability company and limited partnership. But what is the advantage of this mixed company form? The first advantage is that the limited liability company acts as a personally liable partner. This ensures that no natural person is liable for the company's debts. Another important point is that the limited liability company is not tied to the capital of the limited partnership. However, it represents the limited partnership externally. Another advantage is that the shareholdings in the limited partnership do not have to lead to an automatic shareholding in the limited liability company. It should also be noted that the managing director of the limited liability company can be responsible for the entire management of the company without having a stake in the limited partnership. Another major advantage of this mixed company form is that no articles of association need to be filed with the commercial register. This allows you to act without third parties having any insight into your activities. In addition, you should not ignore the tax advantages of this mixed company form. However, you should have these explained to you in detail by a tax consultant, as the complexity is very high. As you can see, the advantages are significant, but that is by no means all. Of course, you should also consider the disadvantages before setting up a company. One major disadvantage is that the formation costs are very high. If the time and effort involved in setting up a limited liability company scares you, you may want to steer clear of a limited liability company and limited partnership. The reason for this is quite simple. You have to ensure that two companies are formed. You should also be aware that this cannot work without the right expertise. Another important disadvantage is that the formation is very cost-intensive compared to other companies. The formalities should also not be overlooked. The third major disadvantage of this mixed company form is that the accounting effort is even greater than for other companies. Another reason for this is that two companies have to be founded and managed. Of course, this must also be recorded in the accounts. As you can see, there are both major advantages and disadvantages to this type of company. You have to decide for yourself whether you want to take the risk right from the start. It would make more sense if you only consider the right type of company later on. In the beginning, it is usually sufficient to set up a sole proprietorship. This will ensure that you can get off to an entrepreneurial start. Later on, you can consider setting up a limited liability company or similar. This will ensure that you minimize the risk in the further course of your business. You also have the advantage that you no longer have to worry about whether or not you will lose your private assets. Corporations, Partnership limited by shares. The partnership limited by shares is the next type of company to be considered in this section. This type of company is also a corporation. As the name suggests, it is a hybrid between a stock corporation and a limited partnership. The formation of a partnership limited by shares offers you various advantages and disadvantages. One advantage, for example, is that it is easier to raise capital. Despite large capital contributions, it also ensures that the shareholders are tied to the company. Furthermore, the management board has a stronger position in this type of company than in a stock corporation. The partnership limited by shares is also very resistant to takeovers. In addition to these advantages, however, there are also disadvantages that can limit the decision to establish a partnership limited by shares. One major disadvantage is that the general partner must be personally liable for the company with a high capital contribution. If this is a natural person, this can be a major initial hurdle. However, you should bear in mind that legal entities can also be general partners. If this is the case, the advantage is that this disadvantage is mitigated. You should also bear in mind that limited partners do not have a large sphere of influence in this type of company. You should also bear in mind the high share capital required to set up the company. As a company grows, it may make sense to resort to this type of company. However, this only happens over time. At the beginning, your capital can certainly be invested elsewhere, where it can generate a better return. Ultimately, however, you have to make a decision for yourself. Nobody can make this decision for you. Another disadvantage of a partnership limited by shares is that a legal entity as general partner is highly complex. As a rule, you will have to rely on experts to understand the company structure. Corporations, registered cooperative. Finally, we will look at another type of company, registered cooperative. What makes it special, and what are the advantages and disadvantages of this type of company? A registered cooperative is characterized by the fact that it is only obliged to promote the interests of cooperatives. It is sufficient for 3 natural or legal persons to form such a cooperative. In addition, the business field of a registered cooperative is very diverse. For example, you can be economically, culturally, and socially active with such a cooperative. In contrast to the other forms of company, the registered cooperative is a democratic form of company. Each individual member has a vote. The amount of capital participation is irrelevant. If you want to make structural changes to your cooperative, you should be prepared for the fact that 3/4 of all votes must be in favor. However, this also gives you the advantage of a high degree of stability. In a cooperative, you do not always have to elect a supervisory board. If you have a small cooperative with fewer than 20 members, you can confidently do without a supervisory board. There is also an advantage for the members of a cooperative. They are only liable up to the amount of their contribution. The private assets of the members are not touched under any circumstances. Overall, a registered cooperative is a very insolvency-proof form of business. However, you should be aware that the formation process can be very time-consuming. In addition, decisions can be delayed considerably. If you want to make quick and flexible decisions that cause structural changes, you will be at a disadvantage with a registered cooperative. The company forms listed here originate from Germany or the European Union. Other countries may have other similar company forms. If you liked the video, please give me a like, subscribe to the channel, and activate the bell so you don't miss any new videos. Thank you for watching the whole video and see you soon. Thank you for watching the whole video.